When we know that our customer is going to love what we sell, it becomes easy to spend more money than we should. It's a struggle I'm facing right now, and it might be one that you find yourself in all too often. In today's episode, let's talk about how we price for profit. Welcome to the Bringing Business to Retail podcast, where I, Selena Knight, share strategies, interview retail revolutionaries, and delve into the minds of e-commerce experts to help you grow a profitable, independent retail or e-commerce business. If you're stuck in a rut, or if you feel like business is way harder than it should be, or you've overachieved all of the things that you've set out to and are wondering what to do next, or how do I even make this better? I know that you're going to love today's episode. If you're stuck in a rut, feel like business is way harder than it should be, or you've achieved all of the things that you set out to and are wondering what next, or how do I even make this better, then I know that you're going to love today's episode. Hey there, and welcome to today's episode of the Bringing Business to Retail podcast. Today, I'm coming to you from a quaint little country town in New South Wales called Cowra. Yes, we finally have our house back. If you've been listening for a while, you've heard all about my trials and tribulations in what I'm calling Sal's Country House Rescue. If you follow me on Instagram at the Selena Knight, you'll see a lot of the trials and tribulations that we're going through right now. When you are renovating a house that is more than 100 years old and has been neglected by tenants, the things that you come across are honestly sometimes vomit worthy. Yes, if you saw my Insta story that I posted just yesterday, you will see the horrible cockroach infestation that we've had to have treated twice now, along with the fact that there is a mouse plague. So we have had the mice treated, and thankfully the mice have been a lot less visible than the cockroaches. So in our efforts to do this house up and sell it, one of the things that I really struggle with is the simple fact that I like nice things in a home. I've renovated a lot of houses. I know where to find all the bargains, but I like champagne looks on a beer budget, as they like to say. So I've brought a lot of stuff with me, but what you can't budget on is things like structural repairs. So coming into this house, which it would have originally been a 4-room house with 2 bedrooms at the front, a lounge room and a sort of kitchen area. Coming into this house, which has got add-ons after add-ons after add-ons, the real thing I want to do is just open the whole thing up. However, that is expensive. It's also really, really difficult when you're in a country town of just 15 to 20,000 people and trying to find a tradesman. Well, trying to find a tradesman who has availability anytime soon is just as hard as trying to find that unicorn product that is always in stock, that customers love and are willing to pay lots of money for, and you have a high profit margin. Yep, very, very difficult. And so a lot of the work we're doing ourselves, and that's okay. You know, we're handy people. We love a good project, but there's been a lot of structural stuff that we've come across. Termite damage. We weren't intending to replace the kitchen. We were just going to paint the cabinets. Turns out we had to pull out the whole kitchen and the floor. And so thousands and thousands of dollars later, and a new kitchen, which is going in as we speak right now. It's been putting the floor in, and I've just put all the cabinets together. Those are the things you have to take into account, because at the end of the day, you need to turn a profit. I need to turn a profit on this house when I sell it. And the market can only call for a certain price. And we've had the agents through, we've had some valuations, and the fact is there is only about $30,000 that we can spend on this house before we end up not turning a good enough profit to make it worthwhile. And this is something that I see a lot when it comes to retailers, is we get products in, and sometimes you might only have like a 20 or 30% margin, but you get them in because your customers love the products. But unfortunately, they don't turn over. And one of the things we talk about inside of Scale Your Store is actually analyzing your inventory with the perfect product matrix. And we talk about high volume, and high cost and how long things stay on the shelf for and whether they're actually viable to keep in your shop. And quite often people find that the things that they get in, just because a couple of customers might like them, are not always the best products to be keeping because they end up costing you money to have on the shelf. Just like this house, I don't want to lose money on it. And I've got to the point where I just know that I want to sell the property. Being in a country town, the prices are nothing like Sydney prices. And so now that the market has finally gone up, we know that this is the time that we want to cash in and sell. However, things like the asbestos removal, the damage that the tenants had caused that weren't covered by insurance, we've got over $3,000 worth of carpet that needs to be replaced. We have floors that need to be leveled that we didn't know anything about, so much termite damage that needs to be repaired. We had to treat the termites again, that's already been treated. And so there's a good $10,000 of our budget there on things that nobody will ever see. And that becomes really difficult, doesn't it? Because you want all the pretty stuff. You want the nice kitchen and the nice tiles and the new bathroom. Just like keeping those customers, those loyal customers happy and keeping stock on the shelf, you have to make really hard decisions in your business. So in today's episode, I talk with my good friend and CFO, Adam Lean, about how to price your products for profit. Now, just a heads up that in less than 2 weeks, the Retail Breakthrough Series for 2021 will be launching. Now, I only do this once a year. It is an amazing 4-part training series that will walk you through how to move from overworked, underpaid shopkeeper into the CEO who has a business that fills their soul and their bank account and doesn't have to be stressed out in the process. If you're already on my email list, heads up, keep an eye on your inbox. I'll be sending you the information for that soon. And if for some strange reason you're not on my mailing list, you can head over to selinaknight.com/waitlist and you will be the first to hear when my training series drops. As I said, this only happens once a year. It is about to go live on the 24th of September. You know you want it, so make sure you are on my mailing list to get the heads up when it drops. And remember to follow me on Instagram or Facebook at the Selena Knight if you want to keep up with all the fab and funny and sometimes quite scary things that are happening in Sal's Country House Rescue. Hey there, and welcome to today's episode of the Bringing Business to Retail podcast. Today, we are talking all about how to make more money. And I've got on the show Adam Lean. He is the founder of the CFO Project. And he knows what it's like to be in your shoes because he's been there. Just like me, we know what you're going through. In 2010, Adam says he hit a really low point in his e-commerce business. And it was only after using his accounting background and diving deep into the numbers that he found the path to profitability. And don't we all want that? So today, Adam is going to share with us his 4-step process for finding profit in the numbers in your business and then actually using them to grow profit and revenue systematically. So welcome to the show, Adam.
Oh, thank you. I'm excited to be here.
I'm excited for you to be here too, because I like to help people make money. And no matter when you work with me, whether it's in a course, whether it's in our group membership site, the first thing we do is get clear on money. So the fact that you are going to come in and give us some extra tips, I am super excited about.
Well, excellent. Yeah, I'm excited to talk about that as well. 'Cause, I mean, one of the most important reasons why somebody starts a business is to make money.
Yeah, to make money. And tell me a little bit about, and I have to ask you because you stuck it in the bio, what is this low point in, well, first of all, what is your was your e-commerce business, and what was this low point that literally made you change everything that you did in your business?
Yeah, so I actually graduated with an accounting degree from college in 2005. And I was like, well, I'll become an accountant. So I became an accountant at a corporate office. And within months, I was just bored to tears. So I mean, accounting, they shove you in the back, they give you a computer and they tell you to record what happened. And that's what accountants do. I love the accountants out there, but it just wasn't me. I wanted to get in, work in the business and get my hands dirty and not just simply record what happened in the past. So 2000, it was around 2005, 2006, I started my own business. And at the time I thought, well, I'll start an e-commerce store because it's something new. And I could do it while I had this day job. So I started it. And then within a couple of years, I was doing $500,000 in sales, and it was growing. Yeah. I mean, it was phenomenal. I was able to quit my day job.
What were you selling?
I was selling roller skates.
Oh, so cool.
In college, one of the ways I put myself through college was by managing a skating rink. And so I had a lot of industry experience.
Yes. And roller derby has made a very big comeback. Do you still have the roller skates?
Yeah, I actually sold that business about 6 years ago, but I used to skate all the time. Roller derby is big here in the United States as well. It has a very, unique following.
I think you were a bit before the times though. Like whoever bought that business has a lot to cash in on as a result.
Yeah. I mean, and I tell people that want to start a business, especially an internet business, it has to be something that you can't, and we'll get into this later when we talk about pricing, but it cannot be a commodity. It can't be something that you can go to Walmart or buy on Amazon.com. It has to be something that is unique. That way you can control things like pricing, which we'll get into later on.
Yeah.
But, I had to pick, yes, I had to pick something that I knew you just couldn't go to the store and buy. And it was something unique. And of course, people were searching for it, which helped. There was demand for it. So I started that. And by the way, I started in 2006, but I really technically started when I was in college. I set up, I tried 3 different times setting up websites, and I built them myself, and I failed miserably.
We've talked about this in the past. We've talked about, I started in 2007, and I go back into Wayback Time Machine and I look at that website and it was purple and green like everybody else's.
Yes. And I was using, I can't even remember the software I was using. These days, there's like BigCommerce, Shopify, Volusia. Yeah. Back then it was a self-hosted e-commerce platform. And it was a like pill.
Flash.
Yeah. It was something, I can't remember what it was called, but it's no longer in existence. I know that much.
Yeah.
So in 2008, 2009, sales were growing, but then a couple of things happened in 2009. And I'll remember it was around October, November, right before the Christmas, Q4, big holiday, big sales. And of course I was banking on that. A couple of things happened. One, it almost seemed like it happened on the same day. I remember feeling so overwhelmed and so confused about what's going on with my business. I felt like I had all these balls up in the air and they were all just going to come crashing down at any moment. Like I owed tons of money to all of my suppliers because of course I had to get the
inventory
purchases before the Q4. And I was scared to death that I wasn't going to recoup that investment in Q4. And then I had a major competitor. It wasn't even a competitor. It was a sporting goods store. We didn't even sell the same product. Not one SKU was the same, but they sent me a cease and desist letter because they felt I was encroaching on their marketing, which was absolutely not true. And that company, I'm not going to name names, but that company is out of business today. And so, but I just felt so overwhelmed. And I remember going to a friend's house that night and he could tell something was wrong. And I just put my head in my hands and I said, I just need help. I mean, it was just bad. I didn't know what was going on. And what was so more frustrating was that I was an accountant. I should have known what was going on in the business, but I couldn't focus because I had so many things to do. I had customer service issues, inventory issues, employee issues, sales issues, marketing issues. And I was failing at every single thing. And it was because I was the business.
Their business. Yep.
I didn't create systems, and I didn't hold people accountable and assign these systems to teams, to my team. And I did not track the numbers like a true CEO is supposed to. And so that's why, fast forward a decade later, I started this CFO project, because I wanted to give people like me somebody that can see through all the mess and say, all right, here's the plan.
Okay. Can I jump in there and ask you,
Of course.
why? Why did you not, you had the experience, like, to the outsider looking in, they could just say, I didn't know what I should have known, but you knew what you should have known. So what was stopping you from taking the time, and I think I know the answer, but I would love to hear yours, from taking the time to actually see how your business was tracking and to see what you could afford and to see where you should be projecting?
I mean, that's a great question. And looking back, I think it was just, I was so overwhelmed. I could not see the forest for the trees.
Mm-hmm.
Like, I was knee deep in the business and I could not see, I mean, I couldn't see the forest for the trees. I couldn't even see a blade of grass. I mean, it was just, I just felt completely overwhelmed. And I felt this pressure of this business, and the fact that, I was doing, $500,000. I can't remember at that point, maybe 750,000 in sales.
Which is a lot of money. We're talking, what, 10, 12 years ago.
Right.
If
yes.
we amortize that, that's a good 7-figure business.
Yes, definitely.
Yeah.
And, I had tons of orders, but I just felt like I had all these moving pieces, and I did not know which of all the moving pieces I should focus on first. I didn't know which ones were in the worst shape. I didn't know which ones I could tackle, or which ones were going great. I just didn't know. And so my solution was just to work longer, longer and harder hours.
They've got a word for that now. It's called hustling.
Yeah, right.
This is an anti-hustle zone.
Yeah, I totally agree with you. Totally agree with you.
Because you didn't get any further, did you? Like, working extra hours, all that did, from what you're saying, and correct me if I'm wrong, is it just added to the overwhelm, because you were trying to do more and more things instead of actually stepping back and going, you know what, I can't do them all. You spent more and more hours stressing yourself out.
Totally. It's just like when people say, you shouldn't necessarily throw money at a problem. Well, you shouldn't necessarily throw more time at a problem.
Yeah.
You got to fix the underlying, you got to fix the underlying symptoms of that problem.
Yeah. And we hear that all the time, to the point where we've actually just released a service. So we hear people saying they spend days uploading inventory to their website, which is just ridiculous. As the owner of the business, you should not be spending days uploading products. So we actually just a couple of weeks ago implemented a service where you can send us your invoices and we do it for you. We get the data from the manufacturer's website. We put the SKUs in, we put the categories in, and your inventory can be up and ready for sale before it even arrives.
Oh, I wish I knew about that 10 years ago.
Well, you were at the forefront, really, in terms of e-commerce. You were kind of at the forefront, because that's when I started. And the world was a very different place. Like, we didn't have data on our phones.
Oh.
There was no such thing. I remember spending $300 on a mobile website, like a wireframe, because we could actually see that more and more people were browsing the website via mobile. And it was the ugliest thing in the world, but it converted. So, like you said, you have to go sit back sometimes and just assess, because maybe the money's coming from somewhere that you didn't even know about.
Right. What's funny is that it seemed like I started in 2006 up until probably 2010, 2011. It was almost like the big box stores, the giant brands that have been, powerhouses in the marketplace for decades. It seemed like all of a sudden, like in 2010, 2011, they awakened to the fact that e-commerce was here to stay.
Yes.
You know what I mean? Like the fact that I was able to rank so high in 2006, 2007 in Google for...
No one else was doing it.
Right. Nobody else was doing it. I had no competition. And it was just crazy. And then all of a sudden, it just seemed like overnight,
Yes.
people popped up.
I was
Big
speaking,
brands.
I was speaking at a independent jewelers conference just recently, and I was doing some research. So as I said, I started my first e-commerce site in 2007, and I remember going to one of the big chains, and I couldn't find any data on any of them, but one of the big chains did say, we were the lead, we were the pioneers in e-commerce, starting our first e-commerce site in 2013. I was like, that's a good 6 years after I started.
Yeah.
So there's definitely something to be said. But back to your overwhelm, I'd love to know, what happened when you went to your friend and said, I need help? What was the outcome?
Well, okay, so that's lesson number one. He was a friend. He wanted to help. He just really couldn't provide great help other than just listening.
Mm-hmm.
And a lot of business owners who are overwhelmed, they'll go to their friends and their family or their spouse, and you'll get a caring, empathetic ear, but you're not going to get true help, and you need true help. It's just like if you're sick, you go to the doctor because you need true help.
Yeah.
And so I did a couple of things. One, I started meeting with a coach that was an outsider that could see my business through without the rose-colored lenses.
Totally unbiased.
Totally unbiased. She was very objective, and she just asked hard questions, and it just helped me clarify. And it clarify my thoughts, clarify what I wanted to do with the business, and it was very therapeutic. Just talking to somebody that understood and got it.
I think we forget about the therapeuticness, I don't know if that's a word, but of speaking with somebody who just understands what you're going through.
Totally. Right. And that's hard because your friends and family and spouse don't understand what you're going through. They want to care. They do care, but they can't see what you're going through. And so I met with her, and she was very helpful from a therapeutic standpoint. And then I started doing something that I did when I was an accountant. I created this spreadsheet, and actually a version of it is much, much bigger and more complex now. But I still use something like this today with my clients and my own business still. But I started tracking every day, week, and month. I tracked key numbers in the business, not just sales and profit, but key drivers of sales and key drivers of profit. For example, conversion rate, the average time spent on site, you have return on ad spend, things like that were drivers, things that were actionable, things I could take action on. And so I had this spreadsheet of all this data, and it wasn't a whole lot because you shouldn't be tracking a lot of information. You should be tracking the most important things. And then I set essentially goals for each one so that if they all met my goals, then I would hit my profit goal for the year. Mm-hmm. And so every day, week, and month, I would track. I would literally take out every morning. I would open the spreadsheet and key all the data in. And then, of course, I would look at it daily, but it's much easier to look at it on a monthly basis when you have all the pieces of information. And I could see easily what metrics were not hitting my goals. And I looked at the one that was impacting profit the most, and that's what I focused on. I zeroed in on and started improving that one thing.
And what was it?
Well, no, it depended on every month. Yeah, whichever one it was. If my average order value, for instance, was not hitting my goals, but everything else was, then that was the problem for that I needed to tackle that month. And that's the thing, when people have a laundry list of problems they want to tackle in their business, well, if you have more than 5, you're not going to tackle them. If you have everything to do, if everything's important, then nothing's important. Nothing's going to get done.
And if you have that, I was going to say, if you have that many things that need to be done, it can't just be you.
Right.
You need some extra people.
That's true. And so I literally was able to start running the business by the numbers and understanding what the problems were. And the problems became very clear after that.
And I think what's really important to that comes to me right now, and obviously it's occurred to you too, because this is what you've called your business, is in a big business structure, that is the job of the CEO. The CEO is not out there serving customers. The CEO is not out there doing inventory. The CEO's job is to look at the numbers and to allocate the resources or to get the information that they need to fix it. That's pretty much all they do.
Yes. And that's why big businesses have CFOs, chief financial officers, to help the CEO guide that person, the CEO, on what decisions to make and what are the most important things. And here's what the problem is with small businesses, is that their bookkeeper or their accountant will close their books, whatever that means. Most people don't know. They'll do all this magic behind the scenes, and the bookkeeper or the accountant at the end of the month will email the business owner a balance sheet and income statement and maybe a statement of cash flows, and that's it. Well, if you're the CEO of your small business, you've got to focus on being able to interpret those numbers to, just like you said, to grow your business. Well, those 3 pieces of paper, those reports are like Greek to most people. They don't make sense. So how can you run your business from the numbers when the numbers don't make sense? And so that's what a good CFO does, is comes in and makes sense of the numbers and helps you understand, of all the things going on in your business, these are the 3 things that you need to focus on. And here's what that means.
Yeah. I would love to ask you a question, and it is a bit of a personal question because I would love to get a male viewpoint on this. And you highlighted it when you said you should be looking at the numbers every single day, but really you need to be assessing the numbers, I guess, on a monthly basis. How would you deal with it on that daily basis? And I know that this used to happen to me. We did the same thing. So at the end of the day, particularly if it had been raining because we had physical stores, the numbers were usually really bad. Sometimes they were like no sales because it was a baby store and people don't want to bring their babies out in the rain. How did you deal with the feelings, or what did you actually feel if you ever had a day like that?
When things were just off, when
Really
sales
bad.
were off.
Yeah.
I mean, at first it was, okay, the honest answer is that starting off the first 5 years, it wasn't that bad here's why. First 2 years, I didn't really know what to expect. I was just happy to get orders.
Yeah.
But then I quickly realized that in the nature of retail, especially I was selling sporting goods, it's a very cyclical thing.
Yeah.
Like you could almost tell when people got their paychecks or when tax returns came back, people had extra disposable money to spend.
Yeah.
So I realized that there's an ebb and flow with retail. Some days are just going to be bad and some days are going to be good. And one order could be the difference between a bad day and good day.
And you can never judge a book by its cover when it comes to retail, because I agree with you. On some of those days, we mainly had served women, but some days a guy would just walk in and drop $1,000. Done. Bam. Done.
Yeah.
And that's all it can take sometimes.
You're absolutely right. I remember my first large order. I mean, most people bought one product, one roller skate at a time, maybe some accessories or parts. My first large order was an Eskimo school in Alaska.
Wow.
Like it was and they bought like 75 pair of roller skates, but it was an Eskimo village. Yes, but it was just mind blowing. And they actually sent me, I requested pictures, and they sent me pictures of their students on the skates.
Doesn't that just
exciting? Yeah.
Isn't that so cool? Like I think that's part of being an independent business, is we literally get joy when people enjoy our products.
Yes. And just the fact that I was able, 3 months before I was an accountant sitting, in a small office, and now I was interacting with an Eskimo village, across the country, across the world.
It's mind blowing. All right.
Yeah.
So let's get back into money, because we want to give some really great tips on how to make some more money. So can you tell me, and this is kind of where you and I got really excited when I came on your podcast, is can you give me some inadvertent mistakes that retail and e-commerce stores make
when it comes to setting prices?
So that's a great question. And I would say the number one thing, and this doesn't have to just be with price setting, but the number one mistake is you got to shift your mind from focusing on sales to focusing on profit.
Yeah.
It doesn't matter how much you make, it matters how much you keep. Sales is the making part, keeping is the profit part. You've got to focus on profit. And so when it comes to setting prices, you've got to think very similar. It doesn't matter how much you price your product or your service or whatever you're selling on your store. It doesn't matter as much how much you price it. It matters how much you keep. So the retail price that you're selling it for is the sales part. Your gross profit is your keeping part. And gross profit is simply a term for sales minus the direct cost for that sale. So if you're selling a calculator, I have a calculator sitting on my desk for $10 and it costs you $2 to buy that calculator from the manufacturer, then your gross profit is $8. Mm-hmm. So the most important mistake, going back to your question, that people make is they focus exclusively on the price without regard to the gross profit. And honestly, that's what you could take to the bottom line, your gross profit. So you've got to focus on that number.
Yes. You were saying it's the keeping money, and I was thinking it's the keeping your business afloat money.
Absolutely. Because gross profit is what covers all the overhead. And then you want to have money left over. That's your profit.
Yes. Your net profit.
Your net profit. That's right. Which is what hopefully flows to the bank account, which allows you to stay in business.
Yes. And pays you a wage.
Yes, absolutely.
And I think a lot of people can get very hung up on becoming, a 6-figure business and a 7-figure business and an 8-figure business. But at the end of the day, I've seen $1 million businesses or $5 million businesses where the owner is still not getting paid.
Right.
So
right. People like to brag about the fact that, I own a 7-figure business and they're not making any money at the end of the day. I actually had a potential client who was doing 1.25 in sales, 1,250,000, and they had a loss. Doesn't matter that you made 1.25 million. That's a lot of money that you're trading.
Very much so.
You're getting it, but you're giving it all back, even some. It's like you're paying to be in business. What's the point?
Yeah. So let's jump into that. Where do you see people leaking money? Like whenever you go into a business and you start looking at the numbers, what are the top 3 or 4 places where you just go straight to have a look because there's a pretty good chance that you can make them more money if you just fix that money leak?
Yeah, so there's 3 things. The number one is just sales. I mean, sales is not the end all, but it does help. It does cure. Sales cures a lot. So sales is the problem, is one problem, but it may not be 100% of the problem. So sales. The second is your gross profit, which we just talked about. And of course, there's 2 ways to improve your gross profit. You can either increase your pricing or you can do one or the other or both. You can decrease your cost from your suppliers. I mean, there's so many times I've worked with businesses where they've used the same vendor, the same supplier for years. And of course, they're the supplier, and this happened to me. My suppliers every year would increase their pricing, a lot of times without even telling me until I see the invoice. And then I didn't pass along the increase to my customers. And so my gross margin got smaller and smaller, and that was a problem.
Can I ask you why? What is the mindset behind, as independent business owners, we can't pass on those prices? Was it just the fear that you would lose the sales?
I think it was fear that I was losing the sale because I loved a discount because I wanted to keep the customer, but that's not that was one of my problems. Mm-hmm. And with the internet, especially now, a customer can price shop you in less than 3 clicks.
Yeah.
They can go to your website, they can see what you're selling it for, and you can go to Amazon, you can go to Walmart, you can go to another retail store and see what they're selling it for. And this is why I tell people you should not, if you have an e-commerce business, you should not be a commodity, meaning you should not sell something exactly like every other website in the world. And let me break that down, because even if you do sell a similar product or the same product, you've got to somehow add value so that people will buy from you versus your competitor.
Yes.
So for example, if you're driving down the road, two gas stations are next to each other, and one gas is say 5 cents cheaper than the other gas station, most people will stop at the cheaper gas station, even though it's two different brands.
Yep.
In the customer's mind, gasoline is the same. It doesn't matter what brand you're buying. It's all gasoline. You should not have that same philosophy. Your customers should not think that when they're on your site. There needs to be some value that you're providing so that you can price differently than your competitors. Because if your pricing strategy is just purely on price and trying to be the lowest, you're never going to win. You're just not.
Can I jump in and say,
Go ahead,
here
please.
is a way, if you're a gas station, here is a way that you would get me to stop there. If I knew that your bathrooms were clean.
Amen.
Yeah, especially
Amen.
as a woman. And I had this problem a lot when my daughter was younger, is I would usually, and as much as it's not in my nature to do this, I would usually stop at big chains because they kind of have a service level that they're supposed to keep their bathrooms to. Didn't always work that way. But if you've ever been on a road trip, or if you've ever needed to go to the bathroom and you walk into one of those skanky bathrooms where you literally don't want to touch anything, that could be your point of difference if you're a guest. We always have clean bathrooms.
I'm a bit of a germaphobe, and my wife and I went on a trip this past weekend. We stopped at a gas station. It was called Circle K. They had plastic, these gloves, like, plastic gloves, essentially, disposable gloves that you can put on your hand to pump your gas. And you just take it off and throw it away. I will always, if I go to a Circle K, go there, even if it's more expensive, because they have something that I value. And that's exactly what I'm talking about. You got to find out what your customers value and speak to that.
Hopefully they are biodegradable gloves. But again, this does not have to be an expensive task. It's not an expensive task to clean the bathroom to a level that, is acceptable. It's just sheer laziness that those people don't do that. Now, The gloves may be a small cost, but if you know that you can go into any of those stores, or you can go to a particular store in your town that has that thing, that can be literally the game changer. And I think that is so important, that quite often we perceive that customers only buy on price. But in fact, it's about the experience. It's like you said, it's exactly what you value and what I value. And sometimes I'm prepared to pay the extra 5 cents to go to a clean bathroom.
Yes.
You are too, but somebody else might not be. So it's not your job to put your values onto somebody else. You'll attract the right customers when your values and their values align.
Right. Exactly. You're exactly right. If you sell if you sell bicycles, for instance, then one way to differentiate yourself and to show value from like a Amazon or Walmart or a huge sporting goods store is by having great sales and service, customer service.
Yeah.
And when somebody calls you, actually having somebody that knows what they're talking about with bicycles, because you're now building trust, and that's how you're building an additional value. That same customer, even though they may be able to get the same bike at, say, Amazon for $10 cheaper, they call Amazon, they're not going to be able to answer those questions.
No.
And so you've developed something that's unique to you that you can offer, and then you can charge more. It's called value-based pricing.
Yeah. And in fact, we've had Jen Gill from Mountain Bikes Direct on the show, and that's exactly her whole team are mountain bike enthusiasts. So when you get on the phone, the person can answer your question. And if they can't, they can ask somebody else that's in the office what the answer to the question is. Okay. So when I asked you the three main leaky points, you said obviously sales, and then there was gross profit. So what's the next one?
And the next is in terms of leaky profits.
Yes.
And we'll talk about cash flow in a second, but in leaky profits, the third is expenses. So many business owners will spend money on things that are not giving them a return. Every time you spend money in your business, it's like an investment. Anytime you make an investment in something, like if you invest in the stock market, you want to make sure if you invest $100, you want to get that $100 back and then some.
Yeah.
Right? Well, the same concept with business. When you spend money, regardless of what it's on, if you spend money on, say, on employees or insurance or marketing or rent, whatever, you want to spend that money and make sure that money comes back and then some.
Yep.
And so many people are running expenses or spending money without thinking this through, and they're just spending money on things that do not matter and they're never going to get a return. And talked to a client a couple months ago who wanted to who spent a bunch of money on this office furniture. It was an e-commerce store. Who cares? like if that's what you want, if that would make you happy, that's one thing, I guess. But that was a horrible investment, because that cash that he used to buy this super nice office furniture could have been used on something that will give a return, that will get you more money back and help improve the profit of the business.
Yeah. I was going to say, instead of profit, the profitability, because sometimes what you're spending money on might give you back time, or it might leverage somebody else's knowledge.
Which is a form of, which we'll see it. Because that's a very good point. A lot of things you cannot truly quantify. You can't really know for sure if this is going to give you a return, but at least if you're thinking about it and running different scenarios and financial modeling around that, then you can have an educated guess when you spend the money.
I think we all get sucked in, and this is one of the audits that I do when I work with a one-on-one client, is we look at all the SaaS subscriptions. So what's all the software that you're subscribing to? And some people are amazed that they're subscribing to stuff they've completely forgotten about. And sometimes when they realize they've got it, like, something like video creation software, it's like, oh, I've been wanting to create videos for ages. I'll use that thing. Or quite simply, it's like, why am I paying $7 for that? And sometimes
and that adds up.
Thousands of dollars. Yeah.
Yes, it adds up really fast. Going out to eat adds up really fast. Take your team, you can easily spend $300 at lunch.
Yes. Takeaway coffees.
Right. I mean, yes.
All right.
So the sales, gross profit, expenses, everything has to be invested to thought of as an investment, because you want to make sure, because if it's not going to give you a return on your investment, you might as well not spend the money and keep the money in your bank account.
Very true.
Why spend the money? Okay.
So we were talking earlier about like gross profit. When it comes to choosing the amount that you're going to sell a product for, do you have a formula that you get people to use?
It's a good question. It largely depends on the type of business itself, because there's several different things you have to take into consideration: how unique your product is, what competitors are, how commoditized your product is. If you're selling something that nobody else sells, like on Etsy, for instance, then that's a bit different, because you can leverage the fact that your customers can't price shop you as easily.
Mm-hmm.
But there's many different types of pricing models out there. You could take your cost and say, I want to increase everything by 20%, or what's called keystone pricing. You just essentially double what your manufacturer's charging you, your supplier's charging you. But the best method, I think, for pricing is just what I alluded to earlier, which is value-based pricing. You have to know what you have to know what makes your customers tick, which means you have to know who you're going after. You can't go after everybody.
No.
You've got to pick a lane. And then once you've picked a lane, then you got to know what makes those customers in that lane tick.
Mm-hmm.
And then build your entire store, the branding, the experience, the customer service, the product pages, the videos, the pictures, everything to speak to those things that your lane values.
Yep.
And then you can charge based on value. You could charge what you feel that your lane values your product at.
As long as it's profitable.
Of course, yes, as long as it's profitable. And I'm a big fan of making sure if at the beginning of every year, ideally November or December of before the next year, is on an Excel or just even on a notebook, writing out your goals for the year, like a budget, if you will. So write out what your sales goals are by product or major product category. Write out what your margins are for that. And then you'll have your gross profit, and then budget out what you want to spend and expenses, and then have a net profit. And then you'll see on paper, it's like you wouldn't build a house without drawing up the plans. You're essentially drawing up the plans for your business on paper. And then if the profit number is not what you want it to be, then what needs to change? And a lot of times it's the sales number that has to change. Well, how do you improve sales? Well, you can either increase prices, or you can get more people to buy, or you could reduce your cost.
Yep.
And so those three things. So based on that, that's how you know what you should be charging. Once you come up with a profit number that you're happy with, then whatever that pricing looks like is almost what you have to price at.
Having that revenue goal, I see a lot of people who say, when I ask, so what's your revenue goal? And they might go, $750,000. I'm like, cool. And then we get out the spreadsheet and it's like, but you only made $150,000 this year. You literally do not have enough stock to make $750,000.
Yeah, it has to be realistic. It definitely has to be realistic. And it can be a stretch goal, but it has to be realistic.
And I think I 100% know that you can get from 150 to 750 in a year, but you have to have a plan. You have to, like you said, you have to map this out and say, all right, I know that I'm going to need, I'm going to have to turn my stock over every 30 days. So do I need to reduce the number of products that I have, or do I need to expand the number of products that I have? What kind of marketing am I going to have to get? What sort of turnover does lead time does my suppliers need? Because if you don't know all those answers, you can have the best of intentions to get to that goal, but someone else may let you down in the process.
Right. Yeah, exactly. And another benefit of having written all this down is that every month you could go back, and this is essentially what I was talking about earlier with my spreadsheet. You could compare if you know this month you needed to do 100,000 in sales, you can, in the column next to it in Excel, type in what you actually did for that month. And if it's off, if it was below your goal, then you could figure out why. And then you could look at all the other goals that you had and compare it to the actuals and see which one was off the most.
Yes. And I think that brings in a very important point about life cycles and knowing how much money you should be making, because I quite often see this here in Australia. It tends to happen in about sort of late February, early March. So we have our big school holidays. They go from December right through to usually the last week of January. So for some businesses, they'll get back to school in that last week of January and even the first week, sometimes Valentine's Day. But once about Valentine's Day hits, the sales are finished. There's no more holidays now till Easter. And so in that February to kind of April is usually a really big slump. And I'm obviously being very general here. But when we actually go back and have a look, historically, that is a big slump time. And so a lot of people get really caught out. They forget what happens in that time and they don't plan forward. They don't go, you know what? February, March is a really slow time. That's going to be when we have our big sale, or that's when we're going to go on holidays, or what are we going to do to actually leverage this down, the bottom of the life cycle.
Yes, absolutely. And you can curb your expenses to account for that. Like if
Right.
you're a seasonal business, you may not need to have a staff of full-time employees. You can maybe just have a staff of 4 full-time employees, and the rest are seasonal staff or independent contractors. Like
Yeah,
there's
that's a really good
so
point.
many things. Yeah.
Yeah. All right. I think you have shared, we could talk about money for a very, very long time. I think you shared some awesome tips. What's your top takeaway? If people wanted to implement something right now after listening to this episode, what would you tell them to do? Just something that's a quick win that they can go and do this afternoon.
I mean, honestly, the quick win is to truly know your numbers.
Mm-hmm.
And it doesn't have to be complicated. Just go for the past 24 months. Just go to your Quickbooks or whatever your bookkeeping software, and just export all that data to Excel, and just look at it and just study the accounts. See your sales. See what your sales are for the 24 months. Look at your gross profits. See what they are, and then just get familiar with your numbers. And just start with the income statement. In QuickBooks, it's called profit and loss. It's the same thing. And just get familiar with it. And then look at all your expenses, see what you're spending money on. This will be an eye-opener for a lot of people when they see 24 months worth.
When we do this in our courses, there's quite often a lot of tears. Not always bad tears, quite often a lot of happy tears. People going, actually, I didn't realize I was making some really good money here.
Yes. And then if you want to get really fancy, take all your expenses, all your cost of sales and all your expenses, and divide that by sales. So your insurance expense, for instance, divide that number by sales for that same month and turn it into a percentage. That way you could compare apples to apples. Because if you had if 1 year you had a $100,000 net profit, and the next year you had a $70,000 net profit, on the surface it looks like the second year did worse, but you need to be able to compare apples to apples, and the best way to do that is to look at percentages. So just take all those expenses and just turn them into percentages of sales, and you can quickly compare apples to apples. If your payroll one month went from 10% of sales to 40% of sales the next month, then that's a problem. You have too much payroll that month. And it's hard to notice that when you're just looking at dollar amounts.
So I think that's a super, super cool point is, if this whole thing scares you, just export the data and have a look at it. However, I'm going to go back even a step further and say, there's a good chance that a lot of people listening here aren't using a bookkeeper or an accountant or even accounting software. So if you aren't even doing that, to me, that is your number one priority, is using stuff. And there are free accounting softwares out there that you can use, like Wave apps, but you have to start. I think taking what you just said is, today should be the day that you take control of your money.
Yeah.
And even if that is just exporting the data and letting it sit for the next week and percolate.
Yes.
But you have to take the step.
People make the financials too complicated, more complicated than it needs to be. There's a lot of bells and whistles to a lot of accounting software, but at the end of the day, all you're doing is recording what happened. You made a sale, that's a record in your bookkeeping. You spent money, that's a record in your bookkeeping, and the profit and loss report is just all the totals of all your sales minus all your expenses gives you your profit. That's it.
That's it. Yeah.
Don't complicate it more than that. You could even if you don't I totally agree with you. You've got to have the right data. You've got to have data. You got to know your numbers, because it's like playing a basketball game without a scoreboard. How do you know who's winning, who's losing? How does the coach know what players to send in?
I feel like it's playing the basketball game without the hoop.
Yes, absolutely. Yeah, totally.
The scoreboard comes next. That's the analyzing the data, but you need the hoop to throw the ball into.
And if you're not a accounting software type person, like if you don't want to use QuickBooks or even pay for it, go to the office store and get an old, a green it's called a green bar ledger. They all sell them now. And it's a ledger book, and just every one page a month, and just write your daily sales and write what you spent. And then at the bottom, you would add up the sales, subtract all the expenses, and there's your profit for the month.
Yeah. Or like, Google Sheets or Excel, like just the first step is just take control.
Yes.
All right.
Yes.
Are you
adding your numbers?
You also said that you've got a little video to help people with understanding their numbers. So we're going to link to that into the show notes. But if people want to learn more about taking control of their money or working with you with Unstoppable CFO, where can they find you?
The CFOproject.com/video is that video you're talking about. So the CFOproject.com/video. And that's where you can see a video on why your business is not profitable. and I have 5 steps that you can take to get it profitable. It's a 20-minute video, very short and concise. But yeah, and you can just also learn more about what we do at the CFOproject.com.
All right. Thank you so much for this, because as you can tell, I'm a little bit excited, because when we can help people make money, the more money people make, the more impact that they can have on society, whether it's giving money away, supporting charities, increasing your own lifestyle, increasing the lifestyle of your employees, whatever it is, the more money you make, the more impact you can have. So I love giving this information. Thank you so much for sharing with it, because the more we can empower people to have profitable businesses, the world is a better place.
Totally. And profit, you're absolutely right. Profit is not a dirty word, because I have a client that his business exists to give it all away to charity.
Yeah.
The more profit he makes, the more he can give it away.
I have a client that's very similar.
Yeah.
And it's the more money we make, the more people we help.
Absolutely.
Okay. Thank you so much for sharing all of this today.
Of course. I'm glad to be here. Thank you.
I hope you enjoyed this week's episode of the Bringing Business to Retail podcast. You can find all of the show notes over at selinaknight.com. If you found something that you heard today particularly useful, I'd love it if you could leave me a review on iTunes or Stitcher. And of course, feel free to share this episode with someone that you think could benefit by listening to it. Want more retail biz strategies? You can watch the Bringing Business to Retail TV show, where each week I'll answer a question or provide you with a simple, actionable retail biz strategy that you can implement in your business right away. If you have a question or a guest, I'd love to hear from you. Drop my team an email at podcast@selinaknight.com, and I'll see you on the next episode. Have a great week.